NIO, $8 a share, all-time high of $67 back in January of 2021. Please, when this video is done, go back and watch our videos, and everybody told us how dumb we were. Go look at the comments, how we didn't understand electric vehicles, just like we don't understand AI now. Guess what? Every investment, it's a present value of all future cash flows. In the short run, stocks are a voting machine. In the long run, it's a weighing machine. Guys, we're here to tell you that we're here to analyze NIO. We're going to look at it because now the stock is down 90% almost. So we don't want to just ignore it saying, well, wait a second, it's a garbage investment at 67, but doesn't mean it's a garbage investment at 8, right?
Right.
But I really have no idea because I have not looked at this in a while. So we're going to go through this. If you're a beginner investor or an experienced investor, we have something for you in this entire video. So stay tuned with us. We're going to go over bull and bear cases. We're going to go over recent news. We're going to go over analyst estimates, and we're going to culminate with our stock analyzer tool. That's the tool we use to tell us what price to pay today based on our assumptions about the future. Because again, I'll repeat this 80 times in this video. Every investment is a present value of all future cash flow. And when you buy a stock, you're buying a piece of a business. I just saw on Twitter today, somebody wrote, look at Microsoft. This company's on a tear this year. And I wrote back, the stock is on a tear. Nothing in this chart shows me anything about the company at all. By the way, the company could be on a tear. But their comment was, look at the stock. And I'm like, look at the chart, and the stock. I'm like, that doesn't tell you anything about the company.
That tells you about the sentiment of the market.
Correct. Think about what Mo just said. It tells you about the sentiment of the market. Right now, NIO is at $67 2.5 years ago. And the sentiment of the market on NIO was, this thing's going to the moon. Now it's at $8.46. What was the low in the last year, Mo? $7.
Yeah, $7.
June 1st just a few weeks ago. So in the last week, it's up 10. In the last week, it's down 10%. Somebody just tagged me in the comments. So let's go over some basics on NIO. First off, $14 billion market cap. This means if you bought every share outstanding, you'd have to spend $14 billion to own every single share of the company. Now, compare that to the enterprise value, which is buying all the shares plus the debt, less the cash. So this is really buying the entire company debt-free. $18.5 billion. Not bad. I'm not looking at this going, this difference here, which is the debt, I'm not sitting there going like, holy cow. However, when you see the free cash flow, Mo, in the last year.
Yeah, it's bad.
Guys, that's bad. Pretty awesome revenue.
Yeah.
$6.8 billion. So this is a Chinese company. So you're going to want to go to annual here.
I was checking out the quarterly here.
They don't do the quarterly.
Our
data feed is not for quarterly.
Let's see here.
It's lost money almost every year except for one. COVID year was the only year it made money.
Yeah, and that's the free cash flow.
Wow.
Yikes. So it took a global pandemic for them to make money.
And barely made money.
I don't like seeing that.
Yeah. But guys, this is a fast-growing company. And you should pay a premium for a fast-growing company. They could be the best electric vehicle maker in China. More power to them. But there's still a price to pay where it's too much for that. All right, let's look at the 8 pillars. Let's see how much of a joke this is. Oh, boy.
They've diluted the heck out of their shareholders.
Now, guys, remember, if you're part of our community, if you pay the $1 a day for our software, you get all the software, but you also get your personal pillars, up to 12 different pillars. There's 4 quadrillion different variations of this. So if you have that, like Mo does, Mo has a couple of them.
Yep.
But let's do our 8 pillars real quick, and then we'll go into the bull and bear case of the company.
Okay.
The only check mark we have is revenue growth.
Not surprising.
Everything else is an X. Does that mean it's a bad investment? Not necessarily.
A lot of unknowns.
A lot of unknowns. Remember, we've bought a company where all 8 were X's, and we've not bought companies where all 8 were check marks. So this is why we teach this process. We're about understanding the story of the company, understanding what the potential is for the future. So Mo, tell us some bull and bear cases for NIO.
Okay, so a company like them, they've made a lot of partnerships. So here's their first one. They have partnered with a company that is an investment group in Abu Dhabi, a part of the Abu Dhabi government. So a lot of what these types of companies are doing is they're going to the Middle East, getting a bunch of money from them. Rivian is doing the same. Who's that other company? Lucid. They're doing the same.
Lucid did the same thing?
I think they're big with Saudi Arabia right now. So these guys are big with an Abu Dhabi investment firm. 5-year agreement with an auto parts giant. They're going to be doing their die casting stuff. So they do have a lot of things going for them as far as partnerships.
There's no doubt to me that NIO's probably going to be here to stay. I shouldn't say there's no doubt. I shouldn't have said that because they still lose money hand over fist. but they're growing like crazy.
So they hold 23% of the market share in China.
23 out of EV?
Market share, yeah. And then they've increased their deliveries 16% year over year.
See, that's not as much as I would have thought, though.
I would have thought it would have been higher.
Yeah.
Because even when Tesla was in its growth phase, they were increasing much more than 16%, if I remember correctly.
Oh, yeah.
Now,
forced to cut prices by $4,200 across all models. That sounds a lot like Tesla.
Sure does. So all of these EV companies seem like they're...
And guys, it makes sense, though.
And they're forced to end their free battery swapping program. Do you remember they were the ones that were doing the battery swaps?
Well, yeah, when you're losing money hand over fist, you got to do that.
So that's not happening anymore.
And guys, this happens in every hype. Everybody enters the market, something happens, what's going on here, it can't miss, and then all of a sudden, guys, when you get saturation in a market, margins become narrow, become very thin. They have no margin here. These things are bound to happen.
Everything has to go perfect for them.
Everything has to go perfect for them.
That's the problem.
So that immediately tells me I should be apprehensive here.
Yeah.
Okay. Now let's check out what analysts are saying about the company.
And the crazy thing is, especially for those that are new viewers, is you see this thing at $67 a share. Now it's at $8, and you're seeing us say we're apprehensive.
Remember, just because something's cheaper doesn't make it a better price. The analogy I always give is, let's say you own a home that's worth $300,000. If you ask $3 million for it, and then nobody buys it, but you cut it to $500,000, you'd be like, hey, look, it's discounted 87%. Well, yeah, but it's still only worth $300,000. I'm not paying $500,000 for it.
Exactly.
That's the thing I want you to remember. I want you to remember that. Price is what you pay, value is what you get. That's super, super important to understand, okay? And the sentiment of NIO, rightly so, has been like a little apprehensive lately, and that's why the stock has fallen a lot. Look at Workhorse, look at Nikola, look at all these other car companies. Ride, who was Ride?
Lordstown
Motors, which is in our backyard.
And Foxconn.
Yeah. Guys, it's just a tough environment. So let's look at good old NIO's analyst estimates.
These are all over the place. And even going into 2026, you have 2 analysts.
Yeah.
Nobody's willing to put their neck on the line here because there's so many
But look how tight these estimates are for analysts back. Come on, are you being serious right now that analysts on their own came out and said, "Yeah, this is our estimate for NIO." Oh wow, we're within 10% of each other. That's pretty sick.
Yeah.
Come on, give me a break.
Let's look at the revenue side.
Revenue side is probably gonna be a lot easier to figure out.
It's big revenue growth.
Holy cow!
As you should expect.
Holy cow!
Yeah. As you should expect.
Wow. $11.5 billion this year, growing to $34 billion in 2027. But one of the bear cases was they're losing market share.
Losing market share. They're losing domestic market share in China, and they're cutting prices like crazy. So I don't know how those correlate with an increase, that type of revenue increase.
Wow. Guys, we believe you should pay a premium for companies that have a lot of potential. And guess what? Even though they're losing market share, they can still grow as a company and do very well. That's okay still. But the question becomes, do you pay a premium for it or less for it? That's the question you have to ask yourself. That is the question. Mm-hmm. All right, so let's check out the stock analyzer tool. Now remember, guys, this is the most used part of our website by our users. 1.3 million people last year used this because it allows them to make assumptions about the future. And then this stock analyzer tool will tell you, based on those assumptions, here's what you should pay, not including the balance sheet. So if you like this, if you like all these tools that are available, if you've been following our site, our channel for a while, this is all available for $1 per day, $7 for 7 days to try it out, everythingmoney.com. You get everything listed here, plus the Everything Money community, thousands of people in here talking about investments every single day across the board. Even people who disagree with me on crypto and Tesla, they're all in there having conversations, everythingmoney.com, $1 per day for 7 days, so check it out. So let's do a 10-year analysis on NIO. Mo, look at this ROIC. Guys, ROIC is return on invested capital. It's understandable this is negative because they've had no operating income.
Right.
And ROIC is net operating profit after tax divided by the money that's invested in the business. So when you have no profit, you have no operating profit, you can't have an ROIC. But that's okay because on growing companies and companies that are startups, it's understandable to have that. So I want you to focus on margins and revenue growth here. So Mo, 10-year revenue growth numbers. Give me a low, middle, and high.
What do you think about 18, 24, and 30?
Let's do it. So 30% revenue growth for 10 years would take them to what level?
And I went 30 because I want to show how crazy this can be.
What was their revenue last year? $6 billion?
Go $7 billion.
So it'd take them almost $100 billion in revenue. Okay, I could see that happening. Sure. Is it going to be hard? Absolutely, but I could see it happening. Okay, what about profit margins since they have none?
I don't know.
So here's the hard part, guys.
I don't know.
This stock analyzer tool assumes profit margin day one. Today. What's the profit margin day one? Let's assume 3%, 6%, and 9%. What do you think, Mo?
That's fine.
And a PE. Starting at, wow.
It's very difficult. 16, 20, and 24.
Guys, look how hard, this is hard on companies that lose money because you have to assume this profit day one. So what does that mean? Since they're not going to have profit day one, we've got to take it out of their desired return. This is our margin of safety down here we need to do. The higher and higher our assumptions, the more margin of safety we need. And since this company's already losing money, I got to put a higher margin of safety here, desired return at the beginning. What are you thinking?
I was thinking 15, 20, and 25.
I love it. Now, you might sit there and say, that's insane. Well, guys, again, they're losing money hand over fist still.
It's insane to go and invest in a company blindly like this and not have some type of margin of safety.
Yes. So we're going to hit the analyze button. Now, stay with me the entire time because this is going to be a great learning experience, especially for NIO. So remember, this is assuming profit and free cash flow today, which is not going to happen. Okay? We're going to come up with 6 numbers here. All right. A low price of $385, a high price of $17. And if you paid today's price of $850 and the low assumptions occur, you're going to make about 5% return. If you pay today's $850 and the middle assumptions occur, 21%, high side 35.
Okay.
So it could make sense.
Yeah. I think we've said in the past, we have come up with numbers that could make sense.
But the question is
it going to happen?
And is it appropriate to make this investment at this point?
Yeah.
Maybe at a flyer? I don't know.
If this is one where if you want to take a very small portion of your money, put it away and just let it ride for 10 years and see what happens.
If you believe these assumptions.
Exactly.
And by the way, this assumes no dilution. And this, again, assumes profit day one.
You're assuming the best situation possible. And I think that's what all those numbers we put in are. That's hoping for no more share dilution.
It's a lot of assumptions.
That's hoping that they don't cut costs even further.
So guys, this is a great learning experience for this video. And if this makes sense to you, subscribe to the channel. And if you've watched this over and over, now's the time. Pull the trigger. $1 a day for 7 days. Check out our software at everythingmoney.com. Thank you very much for your time.